Hi, welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunity. My name is Ryan.
And my name is Lucas.
And we have another installment in our Wise Beyond Bitcoin macro outlook series, where we take a look at all things macro oriented and specifically inflation, interest rates, monetary policy, supply chain issues. And we draw lines between these things and what to expect with financial markets and crypto markets in specific. So without further ado, we have some news to share with you. Not sure if you've been keeping up to date with the crypto markets, but there's been a little bit of pain this morning. We're starting to come out of it, but there was some red this morning when we first opened the phone and took a look at the indexes. And I always think, okay, well, if the market's broadly in the red and the crypto markets are broadly in the red, that must mean that the financial markets are in the red too. And if you look over at FinViz, and these links will be in the description, you'll see that that's exactly what's going on. There's some nothing steep, nothing crazy, but a mild sell-off happening across the indexes, lots of red. And we want to see what's going on. Let's look under the hood. Why is this happening? And the main reason is there's been some big news that just came out about inflation. It's even worse than we thought. So recently, the numbers for January have been released, and they update our year-over-year picture of what inflation's doing, and it brings our headline number to 7.5% for the year. So to put that into context, in December, the number was 7%. So basically, through January, inflation got a little bit worse, not better. And that's expected, right? Because these things tend to have lags, and the effects of policies, they ripple outwards, and it doesn't happen in 1 quarter or 2 quarters, right? It plays out over a longer period of time. So I would expect to see the forces of inflation, for that to continue, right? Not just to peter out for no reason. So the question would be, well, if inflation's going up, why is the market dropping, right? Because often inflation is good for economic activity, right? That's not always, but there is that relationship, right, where businesses see sales increasing, right? Activity increases, new homes are being built, new constructions, expansion occurs. So there can be a good, GDP effect, right? But we're not seeing the market react in that way. We're seeing the opposite. And let's talk about that.
And many people also think that the inflation, you have that higher inflation, what's the effect going to be on commodities and asset prices and digital assets, right?
Right.
High inflation means higher prices for crypto and for digital assets. But we're going to explain why in the short run, when you have high inflation, why this can actually create a pullback, and rightly
and
so.
Asset prices. Yeah,
absolutely.
And that's tied to the reaction of the monetary authorities. So as we all know, the Fed likes to step on the monetary gas whenever the inflation rate dips below a target, and try to get the economy, humming, right, by injecting new money. And the opposite occurs when the economy overheats. They try to step on the brakes and pull money out. And the idea is that this is a dance. They're trying to thread a needle, and it's very difficult given the circumstances and the lags and how complicated this picture is. Mm-hmm. So what market observers are thinking is that the higher the rate of inflation goes, the more the Fed is going to have to step on the brakes and raise rates and restrict the supply of money and credit. And so that explains the negative, the negative reaction, why there's a sell-off.
And we've made videos, we've talked about this, and we'll continue to talk about it. And many people have, because it's very open. The news is out there. Jerome Powell stated we are going to do several 4 or 5, rate changes to help, shore and create stability. Well, when you see inflation numbers come out, they're like, oh, the inflation is higher than expected. That means, oh, okay, well, if the inflation's higher than expected, and it's been stated that there's going to have to be some tightening this year several times, then this must mean maybe we're closer to that tightening. So that's why the inflation doesn't necessarily jump. And so we're going to talk about what possibly we think is happening right now, and that this is not I don't think this is the bottom of what they call the bear. I think that there's a long way still to travel, and it might take a long time, a slow, painful process of consolidating and deleveraging more of what's going on in the world. Right now, I think that this is a response to the deleveraged positions. Every time the market dumps, a lot of longs, there's a lot of leverage that's liquidated, and there's kind of a new floor or a new place to work from. That with that in mind, do I feel that the tightening that's going to happen in the world economy is done? I think it's just starting. And when that really takes place, I don't see these rip roaring. We could look into, just like post-depression or post-bubble cycles, if this is the blow off top of a major bubble, we could be looking at something that takes a few years, a couple of years. It takes a little bit of time to really come back from.
Right. And I think, yes. And to your point is that, historically, Bitcoin is corrected 80%. Like, that's not out of the realm possible, right? We saw it back in 2018 and 19, right? And if you look at where we're at right now, arguably, a similar kind of picture with monetary policy, that's 50, around 50%. So there's clearly more. The potential is greater.
What does 80 look like?
What would 80 look like? Yeah. Well, 80 would bring us to
draw that box. Let's see it.
Oh, hold on. I messed up.
It's all right. That's why you're doing it. I wouldn't even
around let me move this. That would be around $13,000.
13,000.
Yeah.
And could it get that low?
Absolutely.
Maybe not that low, but it absolutely could. I mean,
it could.
The market's changed, so I can see it hitting, in the high teens or low 20s,
right,
as a kind of a newer. However, could it get that low? Easily. I mean, really. And despite the volatility, even if we were to get that low, if you were to take a 5-year, 10-year time horizon, you would still be looking at one of the best performing.
That's right. One of the best assets to be
in all the world, because you're still looking at something that, well, in 2017 was $2,000. So
right.
if it crashes to $13,000 in how many years is that? 4 or 5 years. That means it crashed at a 600% return.
Yeah, so, right. Which is fantastic.
So for something to crash and many people don't recognize that. Now, with all of the new wallets and nations that are shoring it up in institutions, does it really make sense to crash that low? I don't think it's going to get that low. I really
don't think so either.
That's extreme.
Because if you saw that, that would be the outcome. That's like the worst case outcome with not in looking beyond Bitcoin, but thinking about the mainstream financial markets. That would have to be what the majority of the rate hikes becoming real that we've been promised, and then probably higher than what a larger amount of interest rate hikes than we've been assuming, like maybe 0.5 each time instead of 0.25, right? And so you'd have to have. It would have to, and everything would be sold off, right? It wouldn't just be Bitcoin. This would be an everything correction. So, I mean, it could happen, I suppose, but definitely a fat tail, kind of low probability event.
Well, there definitely is going to be an everything correction as you look at Evergrande and you look at what's going on with the debt in the US. There's definitely, unlike the Great Depression of before that was more located to the West and England, the Bank of England and the US. Now we're looking at worldwide central banks and a lot larger and systemic issue with the debt and the pullbacks. So it definitely, however, that being said, you look at blockchain and crypto and what's going on with people working in nations that are working on CBDCs, like whether it's a CBDC, a centralized version, or it's a decentralized version, blockchain technology is where a lot of energy is being vested and is the future. So I would see that in this cycle, there's going to be a decoupling. At some point, you're going to see a decoupling from poor performing, you know, currencies or assets in countries, you know, while the, like usually the technology sector, so to speak, this will be the new, well, it is the technology sector. So
Right.
this will be an area where there is a lot of job opportunities, there's a lot of investment, there's a lot of growth, and it's
For
still
sure.
early. If you're watching this, take your time and learn. We, by the way, should we now talk about real quick our playlist that we have? If you're just getting into crypto, or you want to look at what are the innovative projects being built, well, we have playlists. Secret how to start your secret crypto journey, how to download a Web 3.0 wallet. You have if you have an email address and a phone number, you've made it through a lot of leaps in technology and human progress. And having a Kepler wallet is really, really simple and not that difficult. So we walk you through that, how to send, receive, staking. We got playlists on NFTs. We focus on Secret Network, as Secret Network is the premium layer 1 smart contract platform because it offers privacy. And we go into detail, and will later in our videos. Do your research, because without privacy, a lot of blockchain technology is not practical and it's like unfinished. Looking at a beautiful home with a foundation and walls and windows and a door, but no roof. And you're like, yeah, but you have to have the roof. It's like, I know that you've got a beautiful woodwork done here, and you got this beautiful patio, and it's dry. It's like, it's great, but without the roof, it's like, you know,
Something's missing, something important.
and it's a big deal. So we have playlists about airdrops, opportunities. We have tutorial walkthroughs, and there's more than there's secret NFTs. The NFTs on Secret are just unique, innovative, and you cannot, because of that privacy dynamic, you can't mimic them anywhere. This is your home for non-financial advice, non-medical advice, non-legal advice, non-commercial advice. It's just education, research, entertainment, information that we're sharing our perspectives. And we may have soon other people in this emerging space sharing their perspectives in different languages to help grow this community, because we're all really just trying to understand this new technology. It's an emerging technology that we're all, in these beautiful times, being able to understand and communicate to our friends and our family, and to share the good news of the opportunities that are here right now, when a lot of places, a lot of people in the world are suffering, going through difficult times. It's good to be able to share the love and the light and the joy and the knowledge. So drop a comment, let us know what's going on and other projects that we may look at, because there are many things happening, because we're doing so much to help research and share this. There's things happen we don't know about all the time. So
No doubt. So yes, like, subscribe, comment, share, whatever you want to feel compelled to share. We love the criticism and the suggestions as well, because like you say, we don't see it all. I think that's it for this one, right? Do you have anything else you want to
add? No, I think we covered it. We'll continue to do more regular updates on the macro outlook. And regardless, one thing we learned from our past of, you know, our involvement in blockchain and crypto, even when the markets consolidate or go down, it's not the time to walk away and forget about it. It's a new technology, and it's the time to stay involved. There are airdrops, there are compounding rewards, there are ways that people can take advantage of opportunities even when the prices go down, because if
even
you're
in sideways markets,
sideways and downward market, if you're in it for the long run, that's when you learn, you earn your stripes, and you can really stack, you know, what you have. So when the markets do return on those solid projects that are adding value and utility, then you can be a part of that wave and ride the network effects that are often confused as Ponzi schemes, which we're going to do a whole video. We should just do a whole video, Ponzi scheme versus network effects, because so many times do people say, well, that's just a Ponzi scheme because you need other people to buy it in order for it. It's like, look at every commodity, every asset,
show me where that doesn't apply.
Show me where that does not apply. Like that's literally, you know, economics.
And we're gonna dive into that on the next video.
That's right. So,
well, thank you for watching. We'll see you shortly with more of these macro updates and more. So stick with us.
Next time. Have a beautiful day, and namaste, y'all.